Stan, hello. Good afternoon. It's Andrew here. Welcome to Conversations with Coopman. How are you?
Hi, Andrew. I'm good, thank you. How are you?
Yeah, good to hear. No, thanks for asking, Stan. I'm keeping well. Mark's with us as well. Hi, Mark.
Hi, guys. How are you
Hey,
all?
Mark.
So, look, Stan, thanks very much for taking the time to join us on Conversations with Coopman. I've given the audience a bit of an introduction into your background and yourself, but perhaps you could tell us a little bit about your career to date and I suppose your current role at Aergo Capital.
Sure. My name is Stan Barnes. I'm the Chief Financial Officer at Aergo Capital. I'm also head of HR here. I have about 13 years experience in aircraft leasing, which I started with Standard Chartered Aviation Finance way back in December 2007. I think it's my 13th anniversary, actually, as we speak. Standard Chartered had acquired Pembroke Capital, and my job was to come in and help the team grow the portfolio. Prior to that, I worked with a company called Tyco International Finance, and I had worked for about 10 years as a financial project and regulatory accountant in the Irish banking market. So I started in Aergo Capital about 4 years ago. Ergo was founded in 1999 as an aircraft leasing and trading company. 2014, it was partnered with Carval Investors and it's now owned by funds managed by Carval. Ergo's it's a full service operating lessor, an aircraft manager, and we have about 3 people working in the company. And we manage a fleet of commercial aircraft covering all market segments, mature, midlife, and new aircraft.
Okay, great. Thanks for that, Stan. So I suppose looking at, I think we're at a stage now where we can look back on last year. How was 2020 for Ergo?
Well, look, it's been the toughest year in the industry in general since 2008 and maybe even 2001 and 2. And this particular down point of the cycle is unique in that the whole world was impacted in pretty much the same way. In the previous downturns or crises, certain parts of the world were impacted to a greater extent than others, which allowed us to redeploy aircraft to different pockets of demand. And today, there's pretty much no demand for fleet expansions, particularly if you've got wide-body aircraft. Ergo itself, we took a view in the market, a very fortunate view. In 2019, we were at the peak of the cycle, and we engaged in a de-risking strategy. We sold a lot of aircraft and reduced our exposure to particular lessees, wide-body aircraft, and regions where we believed we were overexposed. And while we didn't know, obviously, that COVID was going to happen, we were fortunate that we were able to close out some business early in the new year in 2020. And with all of that de-risking we had done, we set ourselves up nicely. We spent a considerable amount of time, particularly at the beginning of the year, working with our customers on deferrals and rent deferrals and repositioning of aircraft where we could. And we were also quite lucky that our parent company, Carval, have a lot of experience of working in difficult environments, and they have a big knowledge, a deep knowledge of the cycles in the transportation industry. So their view is and was that this is an opportunity for businesses that are well run and financially secure. And then they kind of show that when they effectively asked us to grow our business and grow our team. And we brought in 2 very senior employees into our asset management side of the business. And we believe we're well positioned to capitalize on pretty much any opportunity that may arise as a result of COVID. We're also looking at developing a new aviation finance platform that we believe will transform our business. So it's been an unusual year, but it's been one where we've been positioning ourselves for growth, I suppose, as an overall review of it.
Good stuff, Stan. Brilliant. Thanks for that. But I suppose before we look forward, it's always good to look back, I suppose. Well, not so good to look back in these circumstances, but what did you find most challenging last year?
Well, if I go back to the beginning of the uncertainty, it was around February, March time when it started becoming quite obvious that it was going to have a big impact. And budgeting was a big issue for us. It's around the time where we get our budgets and we present them for approval, around February time. It's a big process, takes weeks of preparation. And when COVID really started impacting on travel, pretty much every part of our business and the budget needs to be revisited. And we had to factor in all of our agreed lease deferrals and look at proposing cost-cutting measures, particularly to our parent company. And as I mentioned previously, they saw this as an opportunity, but we still needed to show them that we were taking it seriously. We looked at our expenses, we looked at our income. We decided that one of the casualties would be our intern program, which was a big thing for Ergo, because we pride ourselves on our intern program, which gave us the opportunity to train and grow young finance, commercial, legal professionals. So that went, and that it gave a little bit of uncertainty to the team, but we were able to reassure the team that this was a necessary measure just to make sure that everyone felt secure and safe in their jobs, all of the permanent employees. And just to show, a large proportion of our current marketing team came through the intern program. So it's something we used quite a lot, and it wasn't nice to give up. Other areas from CFO perspective, it's become increasingly difficult to get external debt financing, and a lot of our business when we're acquiring aircraft is also to secure external debt. The banks at the moment, because of the uncertain market, they're running scared, and they're not really engaging as much as they used to. So that's particularly tricky to do. Though, mind you, we closed a deal where we purchased and leased the aircraft back to British Airways, and we got bank debt on that particular one. I'm also head of HR, which has been a really unusual and particularly difficult period. As head of HR in a small company, I mean, a lot of it is down to pretty standard hiring and dealing with employees on a day-to-day basis. A lot of it is standard, but this is all new, and particularly new to me. Our team is spread out around Ireland and the world, and we've team members in the US, UK, Hong Kong, and shortly a couple of our team will go back to countries such as Canada and Dubai. And then we've people in Ireland as far away as Kerry. So isolation was and is a big factor when the lockdown becomes a little bit more challenging. And we worked hard on communication. We used Zoom and Teams probably as much as anyone, to the point where everyone was getting tired of Zoom and Teams calls and getting pretty much sick of them.
Yeah.
Then from a finance perspective as well, it's difficult when you're working with numbers and not being together. And that was tricky as well, dealing with the team and learning how to use Zoom and Teams to show figures and discuss things was interesting, to say the least. Yeah. And then I also found that it was difficult to keep team spirits high, and we tried to tackle that. We did we had an online pizza making hour, which was good. We dialed in from our kitchens and everyone made pizzas, and found it quite interesting that rather than sitting there looking at each other and not knowing what to say, it was very engaging. We're trying to be inventive in everything we do.
Yeah.
Were you meat feast or Hawaiian, Stan?
Well, I ordered. I got the pepperoni, the easy
one, man. Stan, yeah, fair play. So obviously, the market in general, has been pretty much on a bull run then for the past 10 or so years. I suppose what was Aergo expecting before COVID, and what's been the reality?
Well, as I mentioned, we were de-risking because there are lots of new challenges in our industry, and we were expecting the continuation of new money entering the space because, with the right money, it's very attractive with strong, stable returns generated from aircraft leasing. So we were expecting a continuation of that. And in the past, this increased amount of capital and competition had led to some undisciplined underwriting, which meant a lot of deals were closed, were quite risky, and there wasn't maybe that much return. And we were expecting some of the lessors that had entered the market to come under pressure as a result of the deals, which again would give us more opportunity, particularly with the amount of equity that we have available to us. Mm-hmm. Now, obviously, we didn't predict COVID, but we did feel the market was overheated. So, as I mentioned, last year we became net sellers of assets. Particularly over the last 2 years, I suppose we had been selling assets, but last year we saw quite a lot of aircraft, and something that had been in our DNA, over the last 20 years, particularly buying and selling aircraft. So it was a natural step for us. Carval, they expected that 2020, 2021 there was going to be a market reset. Now, obviously not as severe as COVID would have caused, and they had started raising capital in general and specifically for the aviation leasing market to be well positioned to take advantage of what they foresaw. And then the impact of COVID has further benefited us then with the amount of equity that is available to us. The reality being that we were well positioned for this downturn, and the growth in our team hopefully will give us a good leg up in the recovery, which we expect to begin next year, probably a bit earlier than we had thought because of the vaccine information that's come out.
Absolutely. And I think if you look at other airlines and other aircraft lessors, they may be, are in a different situation where, the focus is potentially on collecting the revenue or provisioning. Very much, from Carval and Ergo's position in the market was to take this as an opportunity and to look for the deals. And you've mentioned kind of going to the debt markets and using your equity position. For Q1 and Q2 of this year then, is it fair to say that Ergo's focus will be to continue to find those deals, or what will Ergo's main focus be?
So if we go back to the beginning of 2020, it was definitely our focus was on deferrals and talking to our lessees and trying to understand them a little bit better and work on deferrals and making sure that we didn't put too much pressure on the lessees. So collecting revenue was definitely something that we needed to do, but we were also in a position where we could work with them and come up with plans over longer terms to allow them, not to put them under too much pressure. And as I mentioned, we're fortunate in that we don't need to raise any more capital. Our biggest issue now is deploying capital, particularly Q1 and Q2 2021. We're going to be looking for new deals. We're going to be looking at airline sale and leasebacks with the stronger carriers. And we are seeing pockets of activity there, and we expect there to be more deals on the lessor-to-lessor market as well in early 2021. We're continuing to manage the portfolio and supporting the clients. We are, as I said, seeing buying opportunities from both airline purchase and leasebacks and lessor portfolio sales. We're expecting it to accelerate in the first half of 2021. As other lessors recognise losses and financings come under pressure, we're expecting smaller portfolios, small portfolios or single aircrafts come to the market, which will be profitable for us over the longer term. We've in Q4 of 2020, we've acquired and been mandated for a number of aircraft, and just in December, we just closed a deal for two A320-200s on lease to British Airways, which is our third aircraft on lease to British Airways in the last quarter. So, as I said, our main focus is on deploying the capital. We've quite a large pipeline, which hopefully we close some deals.
Brilliant. So that's obviously going to be hopefully a more exciting year in 2021 than it will be in 2020 for you guys then.
Yeah, absolutely.
Fingers crossed. So look, I suppose looking at Ireland, looking locally, our new government and our old government that's come in 2020 have implemented and had implemented really harsh restrictions when it came to air travel, with the green line and whatnot. Are there any other countries that you work with or you've exposure to that where you can see activity actually increasing?
Yeah, as I mentioned, we deal in some of the more the more testing environments. We would have a lot of aircraft in Asia, and some countries in Asia that manage to control the spread, but we're seeing it we continue to see increasing trends in quarantines and closed border. China has clearly been the leader. We're in the process of closing a deal with another lessor to acquire another Chinese leased aircraft. We already have one in our portfolio. We find Europe is trending a little bit more towards lockdown at the moment, as has been witnessed in recent weeks. But we're hoping for that harmonised system of test and trace that's been talked about to allow for COVID-free passengers to cross borders without restriction. And the vaccine, of course, is the long-term answer. But in the short term, we think testing capacity is the safest and quickest way to get people travelling again. Asian travel corridors are opening between countries with New Zealand, Australia, Singapore, Taiwan, Thailand, Hong Kong, China. They're all participating in some extent for business or leisure travel. As countries get local cases and tracing comes under control, testing becomes more affordable, and we're expecting rapid and reliable travel should return. And we're seeing a lot of pent-up demand for business and particularly leisure travel. But with all the changing rules and uncertainty, we think it's holding back a faster recovery. But look, it's fingers crossed now with the latest news on maybe a Q2 recovery, a beginning of a recovery.
That would be great for everybody, I think, to start to see even a recovery happening. I think when you look at your strategy for the year ahead, is are the locations where they may be seeing increased activity in terms of business and leisure travel, is that going to influence potentially where you go for the deals, or would you be taking more of a longer term view in that, the recovery may be back in 2022 and you're kind of going that basis?
Well, we're obviously, it's fingers crossed. We're looking at effectively all the deals that are in the market, so we're not really shying away from anything. We're looking at all opportunities. I mean, where we may have looked at wide body aircraft and said, look, we're going to keep away from those. But a wide body aircraft with a tier one lessee for a long term lease all of a sudden becomes really attractive. So we're not shying away from anything. Any opportunity that presents itself will be certainly something that we're looking to.
And from Ergo's position and obviously insight into the markets, and you read a lot in the wider media around predictions, and obviously you mentioned there kind of Q2 maybe the start of recovery, but in terms of kind of broader context for the industry as a whole, what would kind of Ergo's predictions be for aircraft leasing in kind of 2021?
Well, Ergo's perspective, from ourselves, we're aiming to grow. We intend to look at the asset management side of the business. So where others may potentially get themselves in trouble and maybe banks might take aircraft back, with scenarios like that where we can go in and help with the asset management side of the business, that's something that we are, as Aergo Capital, are looking to grow. But in general, we expect to see more insolvencies. There will be more aircraft grounded, and we expect more pain in general, particularly in the first half of 2021. IATA, the International Airline Transport Association, they're predicting traffic will recover to around 50% of 2019 levels in 2021. So it's a long way from full recovery. It's an increase from 2020, but still below where you'd expect the trend to go. It means there'll be more opportunities for companies like Ergo, and other companies can react quickly to market changes and challenges. Our view is that our team has the experience and expertise to cover this. And though it's been a tough year, we're looking for closing opportunities that we can present to our shareholders.
So I suppose internally for everybody at Ergo, it's kind of looking ahead. It's finding those opportunities and it's executing. Whereas potentially the industry as a whole, it's definitely going to be, still a challenging year ahead in 2021, especially the first half.
And look, we found, it's very fair to say. And look, we're not the only ones that have positioned ourselves for growth, and we're not the only ones that are well secured. So there remains competition out there, but obviously it's a tricky market, and there are challenges that we would have never encountered before. So we're optimistic, but we're cautious as well.
And lastly, from myself, Stan, I don't know if Mark's any other questions, but lastly for myself, do you think the next bull run will last 10 years?
The $1 million question.
Hopefully, says you.
I mean, people have been betting on the leasing cycle. It used to be viewed as a 7-year cycle, and people have been betting after year 7 that look, it's only a matter of time before things change and there's a downturn. And I mean, with the increase in new entrants into the market and the new capital that was coming in particularly from countries like China, it may have been artificially kept afloat, but as I said, Carval and our senior management team, we decided that we felt that in 2019 we were at the peak of the cycle. It was a guess, and had COVID not happened, we may not have seen this downturn the way it's happened. We likely wouldn't have. Predicting it in the future again, unless there's another black swan event, it's almost impossible to tell. The 7-year cycle, I think those days are gone. So look, fingers crossed that the market will pick up as we expect from Q2.
Definitely. Bring it back closer to home into Ergo again, because we're obviously speaking to a lot of people, not only in aircraft leasing, but across financial services. And I suppose, obviously, with the vaccine being disseminated at the moment, the whole, people working from home, and you mentioned earlier in the podcast about isolation and so forth. Do you have any idea how your office is going to look in, post-COVID? Like, are you guys going to implement a hybrid working model, or how would you envisage how that's going to look?
That's the $1,000,000 question.
Yeah, it's
Well,
tough to know. Yeah.
If I think back to April, May, June, when all of this happened initially, I have to say that the websites, the HSE and the government websites were brilliant for giving advice on how you should set up your business to work in this environment. And we followed it to a T. I mean, we had a mock audit of our the measures we'd put in place. As I look out my office now, I'm in the office currently to do this. We've screens up separating everyone. There are dispensers for hand sanitization all around the office. Windows, there's some windows open. Office is freezing, but there's some windows open. And we've really changed the way we operate. We have calls. Some people are in the office, very few. And then there's people, as I mentioned, around the world and on Zoom. And we've managed and we've gotten used to a lot of it. My personal view is you can't beat having everyone together.
Yeah.
So I have spoken to people in some of the larger companies, some of the big financial companies, and they don't see it ever getting back to normal for their companies.
Yeah.
Particularly when you think about things like real estate, where the likes of KPMG, PwC, those kind of companies, and they've got hundreds and thousands of employees, and having them all work in Dublin, there's a huge cost, and they need to keep these big businesses and offices afloat. And the thoughts of working in regional offices could be quite attractive for companies like that.
Yeah, definitely. Yeah, because again, we're speaking to both clients and individuals, whereby, even with an instance there yesterday, whereby I know of one particular, a couple of people actually who sold their residential homes in Dublin and have actually moved down to Waterford. Another person moved to Wexford, and their plan is actually to commute one day into the office and then do 4 days from home. So
Yeah.
it really has flipped on its head. I was just curious to see what would happen for Ergo. Would you be implementing that more of a hybrid working model rather than that restrictive 5-day a week in the office again? But
well, we currently do because as I said, we've got people based around the world, so that environment is there. I don't really believe it works for a finance team, though. Currently, we have a team A, team B, where half the team is in 1 week, half is in another week. So that may work, but realistically, I think it'll be a slow return. But I do believe we'll come back to the office.
right,
There certainly have to be changes made, but I do believe we'll come back, particularly with a vaccine.
yeah, definitely.
Well, I think it's safe to say that there's obviously external challenges in the year ahead, and then obviously on the internal side as well, as we get people back into the workplace and make that transition again. But I have no doubt, Stan, that the professional outfit that Ergo are, and the talented professionals that you have in place, that you'll be well positioned for the year ahead. And it sounds like you're obviously looking at growing, which is great to hear, and long may that continue. So thank you very much for taking the time to speak to myself and Mark today. It's been an absolute pleasure to get you onto the podcast. I know it's been a little while in the planning, but delighted to have you join us. So thanks for taking the time and
thanks for having me. Appreciate it.
And all the best for the year ahead, Stan. Thank
you, Stan. All the best now. Bye.
Thanks for joining us on Conversations with Coopman. If you are looking to hire excellent talent or considering your next career move in front office, risk, compliance, or accounting, please reach out to a member of our specialist recruitment team. If you have any questions about the financial services market, feel free to leave a comment below and we will get back to you soon. And if you like this podcast episode, we'd greatly appreciate a video like, or even better, subscribe to our channel to stay up to date with our latest releases.